What is going on YouTube, guys? I had to evacuate from my house in Fort Myers. Of course, this Category 4 hurricane is making a beeline straight to Fort Myers, Florida. And they're predicting up to 12 to 14 feet of storm surge. And since I'm close to the beach, mandatory evacuation. Now, fortunately for me, my realtor is both attractive and she's intelligent. And I know what you guys are thinking. Wow, she's just like you. And I want to thank you for that compliment. But she was able to find me a vacant home in Naples. Now, unfortunately for me, that's only 45 minutes south or 35 minutes south. So I'm still in the hurricane impact zone. I already lost power earlier today, but all day I've been moving stuff. You have to excuse the echo because the house is not furnished. It's completely empty. I'm sitting on a stool that I built. Okay, I built this in the backyard. I found a round piece of wood and a brick, and I found some nails in the garage, and I found some wood blocks to put it on. So I'm sitting on a stool that I hand built so I could make this video for you. Now, guys, this video is going to be big because I may not be able to make a video. The storm's supposed to impact, I guess, tomorrow night or Thursday morning. And when it does, I may not have power. Last time I wasn't even in the hurricane path when I was in St. Augustine, Florida, but we lost power for a week. So we'll see what happens with this, okay? But if I'm gone for a while, I just want you guys to know I'm taking this market with me. I'm going to leave you the information that you need to be able to be successful in this marketplace. So this video is going to be a little bit long. Oh, and also for you guys that keep complaining about that 480p video when we upload clips, Lee figured it out. We talked to another YouTuber. There's an additional process we have to do. So all the future videos, including the ones with clips, will be in 1080p. We tested it today. I'm going to re-upload that Jeremy Grantham YouTube that I made in case you didn't watch it. I'm going to put it on Rumble, okay? It's going to be in HD, so you can watch the whole thing in HD if you want to watch it on a TV or a laptop, or if you didn't even see it, because YouTube didn't put it in a lot of people's feeds because it only went to SD. But I thought it was a really useful video. So guys, let's go ahead and get into this, okay? And if I do disappear for longer than a few days, then I'm probably dead. And if I do die, I want you guys to know one important thing, okay? One very important thing. Now, as I'm saying this to you, you think I'm joking. I got a tornado warning as I'm recording this video saying extreme danger, take immediate shelter. So hurricanes produce tornadoes, they produce storm surge. The hurricane itself doesn't actually kill you. It's all the other stuff that it does that can kill you, like a tree falling through your house, okay? But I do want you guys to know one thing if I die. And that is the Rings of Power is a garbage shit show of a show, okay? That is a horrible show. I'm a Tolkien fan, and I've been making myself watch this. It is the slowest, most poorly written, poorly acted show that I have ever seen. And that's the one takeaway I want you guys to know if you never hear from me again. Don't waste your time on that show, and if you do, definitely leave them a negative review because it sucks, okay? And I was so disappointed in that. I'm so disappointed that a trilogy of movies made over 20 years ago has better CGI than a $1 billion TV show, the most expensive TV show in the history of mankind. And you got shitty actors that look like they're doing something on the CW channel that cannot act. And the story is just horrible. It's so boring. And I say that as a fan. But let's get into the TA. DXY, guys. The DXY is up at 114. I didn't get to see any of the charts today. This is literally the first time I'm looking at the charts because of what's happening here in my life. But guys, pay attention to this because we got to here 121 and .com and the markets did this. Boom. Okay. They completely cratered and you're at 114. You could be getting here quite quickly if the DXY keeps moving up like this. Let's go ahead and check out the S&P, guys. This is the broader market looking at the weekly time frame, okay? Weekly time frame, you're still above the 618. You still have not tapped your 200 and 233. Right now you're at 36.55. 618 is 35.93. Guys, let me decode this market for you because I can tell you with 100% certainty, even though I always say nothing is certain in life, let me tell you what I think is going to happen. And then I can tell you exactly, if this does happen, how the people on the media and other YouTubers are going to react, okay? Let me go ahead and draw this for you. So when we test the 200 and 233, like I've been telling you, we could get a little bit of a bounce. But ultimately, I do believe we're going to capitulate down, okay, which means we are losing the 200 and 233. For you guys who have been watching this channel, and you have to excuse this echo, I can hear it, but it's because the house is empty, okay? But you guys have been watching this channel know that I believe we're coming down to 3141 on this A wave, okay? Remember the Gann market pattern, law of three impulse waves, ABC correction. Now, you've seen me over the last few videos go over these bubbles and what happens in 1973, Y2K, and .com. What happens, guys, when you lose the weekly 200, 233 in every single bubble? Once you lose this, you come down for support. In this case, I do believe it's 3141, and the S&P will then move back up. Right here at this A wave at 3141, I want you guys to listen to the business news. Listen to CNBC, listen to the permables on YouTube and the media. They will tell you this one key phrase. I will bet you money they say this: generational buying opportunity. Generational buying opportunity. Generational buying opportunity. This is how bubbles sucker the suckers in every single time. Pay attention to that, okay? Because this is not what you need to worry about. What you need to worry about is when this comes up to the B top here, because the 200 and 233 will be coming over. When you go to back test this, watch my previous videos, guys, including that Grantham video from the other day, once I put it up in HD. When you go to back test this, the bubbles have a pattern. I want you guys to understand that pattern, but every single bubble, you have not been able to substantially get above the 200 and 233. What do you need to see? You need to break above the 200, 233, build your accumulation box. Remember, you have your box, you have your Wyckoff structure, come up, make that cup, and break out. That's what you need to do, back testing that 200, 233 for support. If you don't do that, and I don't think you will do that because the economy is unwinding, if you don't do that, you're going to have this, okay? Let's just look at one bubble really quickly. We'll go to 2000, 2008. It's on the same screen, so we can do it right here. Each and every time, I just want you guys to see this because this is the leg that we're coming up to. Here in the Great Financial Crisis, you are right here, okay? Let me go ahead and expand this some so you can see this. So you were right here. You're above the 200, 233. You're about to test it. You're literally like this candle right here. Do you see what happens when you don't get back above it? You come up, you fall to support, deep retracement, fall to support. You come up, you test it for 3 weekly candles. So for almost a month, you tried to break the 233 here, and what happens when you fail? That's your next leg down, guys. And you can see it. It's in the 1973 bubble as well. It's also in the Y2K bubble. Once you break below the 200, 233, here you're able to get above it. And this is what you need to watch for because this is a big fake out. You got above it for what? Several weekly candles up here. What? 4, 5, 6 candles? And then what happened? You capitulate it back down, and then you had a back test again of the 233, and then you had another deep retracement. Remember, the dot-com crash took 2 years to play out, okay? So this could go on, but just be aware that's where you are right now, is back testing, or is testing this 233, 200 for support, and once you lose it and you come down to your retracement, you'll hear people say numbers like 3,400, 3,600, whatever their number is. I think you're coming to 3141. I think you'll be there around the same time as the Russell and Bitcoin, that October 31st weekly candle. I don't have a candlestick pattern on the S&P, but the markets as a whole move in unison. Remember, the Dow and Dow theory just gave you a market sell signal. Dow Jones Transportation lost its June lows. Dow Jones Industrials lost their June lows. Okay, that is a Dow theory sell signal. The markets, I do believe, are going to start coming down, guys. You're getting some turbulence right above your 200, 233, and then watch that retest of the 200 and 233. That will teach you guys a lot, okay, what happens in this market, because we're going to have that big leg down. Remember my S&P targets. I don't think anybody else has these targets, but we went over this in previous videos, getting down to the 61.84%, the expression of Fibonacci. 61% retracement from the all-time high brings you down to 1841. The 15% retrace or 50% retracement brings you down to 2409, the 1618. But remember, we hit the same fib every single crash, including the pandemic. any major crash, we hit that same fib. I went over that in the previous video, and that fib brings you to minus 61%, cutting the S&P in half from where it is, which is why nobody will think it's going to get there, and they're all going to tell you, put everything you got into it right here. And this is a great tradable bottom, guys. If you can catch that bottom, trade it up for sure. But as soon as it starts to peter out in that back test, what I'm doing, because I don't give financial advice, is getting out of it. Let's look at this on the daily, S&P on the daily. Like I said, guys, we're going to go over everything, so I don't know if we'll be able to get a video out in the next couple of days, okay? S&P on the daily here, 36.36 is your one fib. You wicked below it. You can see how weak the price action is, okay? This is going to break down, guys. I hear people on the business news talking about this being a double bottom. As you can see right here, you would have your double bottom. Where's my brush? Where'd the brush go? There it is. You have a bottom here and a bottom here. This could be a double bottom. The market is too weak for that. You know, we are in the 7th year of the Shemitah. We are in a 3 sigma bubble. These things are related. You know, on business news, you'll hear this, and I heard it a dozen times today when I'm driving back and forth between the two houses, had my phone playing. We are in the weakest part of the season. This is seasonality. You know, nobody knows why, but September is always really bad. It's always traditionally and historically the worst month of the year for the stock market. Well, why is that, guys? Because every 7-year cycle, in that 7th year, when there is a crash, it's in that 7th year. And when does the Shemitah end? It ends in September, which accelerates the down move. Okay, that's why you have that seasonality. The difference is these aren't cycle traders. These aren't pattern traders that you're listening to on the TV. They don't understand that. They just think, they just shrug. I don't know, September's always a bad month. It's not always a bad month. It's a bad month because all these crashes accelerated, these big bubble bursting. 1987. 1980, 1973, Y2K, Great Financial Crisis, and now they all accelerate exiting the Shemitah. It is a pattern. It is a cycle. So you got to hold this 36.36. I don't think you will. I don't know how long you'll stay above it. You could start to see it break down this week. You are oversold on the money flow. But guys, in reality, when you think about this as a trading range, you're not actually oversold, okay? Because you were down here in June, you had that rally, failed at the 200, again, a bear market rally, which we predicted the whole way up, shorted the indices up here at the 200s, and what did it do since then? It fell right back down to whence it came. So when people say you're oversold, of course, on any oscillator or indicator, you're going to look oversold, but in reality, you're at the bottom of your trading range, the beginning of where you rallied from. You are not actually oversold. You can go down more regardless of what your indicators say, okay? So just be prepared for that. NASDAQ on the weekly, the NASDAQ is important here because you're already at your 200 and 233. The Russell's beneath it. The Russell's beneath this, and the Russell's beneath the 300, okay? So once the NASDAQ loses this, remember, I got the NASDAQ coming down to 10,179. It's at 11,292. Just like the S&P, you're going to get that rally, and you're going to hear everybody say generational buying opportunity. You're going to get that rally, and if you come back up to this 200, 233, or you retrace deeper here to your 300, you have to watch how it handles the 200 and 233 on the weekly, okay? But use the S&P as your guide because the S&P is the broader market. It's the broader market, so you need to understand what's happening in that broader market. But once you lose this, the NASDAQ is in trouble, and it's wicking it. It's wicking through it, bouncing on it. It's a matter of time. That's all it is. And of course, the NASDAQ, we shorted this at the top. This is one of the trades I shared on YouTube as well as in our Discord. Guys, if you want to join us, you can join our Discord group with the join button right underneath this video. Fantastic community. If for nothing else, come join, check out the community, check out our educational videos. I have professional traders there posting trades, doing live streams. I do live streams when I'm not under duress from a tornado, but it'll be a lot of fun, guys. You should come check it out. And you can see here the NASDAQ trade playing out beautifully. The one fib here, of course, is at 11,038 off of this pattern. Very close to striking it. Extremely profitable trade. Let's look at the Russell, because the Russell we do have patterns on. The Russell, remember, we have coming to a bottom, October 31st weekly candle with Bitcoin. The Russell bottom that nobody, including the TV, is talking about is 1521 for this move, okay? The Russell's got a lot deeper to go. It's going to end ultimately retrace to 697, okay? A 73% decline based here on Fibonacci. But for right now, the Russell is bouncing. Look where this is bouncing. This is what I love about geometric trading in the marketplace, okay? This is a S curve. This is a double S curve. And look exactly where that weekly candle bounced off of. A line that has no number attached to it is a geometric shape, and it bounced right off of the double S curve. Almost literally to the dollar, okay? So you're below the 200, below this 300, the Russell is, and you're on your way down here. And once the Russell loses the 0.5 fib at 1618, you're trading at 1664. Your next stop here on the weekly is that 0.5 fib at 1618. Once you lose that, look out for 1521. And guys, we're just over 30 days away from the Russell and from Bitcoin and most likely the other indices making that tradable bottom, okay? For all you people that are patiently waiting that don't like to short, that tradable bottom should give us a very nice rally, okay? Very nice rally. If the pattern plays out the way it's been playing out, you should be rallying into what, January 2nd weekly candle. So you're looking at an extended rally of 9 up candles, okay? 9 up candles. That's over 2 months. Because remember, everybody will say generational buying opportunity. I expect some force here, and then something will occur. We don't know what. We don't know what event will occur, but the market moves in patterns. It could be a new high inflation report, could be bad earnings, could be something happening in Europe because it'll be January, it'll be winter time. We don't know, but some event that was not forecasted will occur, and it will cause the market to crash because you are trading in a cycle, you're trading in a pattern that the market has repeated multiple times over the last 50 years with a 100% certainty, okay? Looking at the Russell on the daily, the Russell here, of course, we traded this as well. This is a short that I'm in. And we're hovering at 1665 is the 1 fib here. You're at 1664. The 1 spot 128 is at 1632. We could come down and test that out tomorrow. Again, the oscillators, the indicators, all showing that you're oversold. However, you look at your time segmented volume. I mean, you got a lot of down volume here, okay? You got a lot of down volume and trend. And let's go ahead and jump over to Bitcoin. You guys have been patiently waiting, my crypto fanatics, suffering through my TA on the marketplace. So Bitcoin, guys, this is that weekly time frame, okay, that I showed you guys. Let me go ahead and zoom this in a little bit. If you can see here, this was that double top structure that we were talking about. And just let me grab that. Come here. Let me grab this out of the way, turn the magnet off so you can see this, see that target once again. Go ahead and come here. Get that off there. Put this roughly around the neckline, which you could say is right at that red dotted line. This basically drops you down here to that 1618 at 13,576. You see that? Maybe you'd find support a little bit sooner. But this is a double top that you formed here, and you're dangerously close to breaking it. Okay, a lot of supply dumped on this last weekly candle. And of course, we have that tradable Bitcoin bottom of 10,591 at phi, the 1618. Coming down there on that Halloween candle, that weekly candle on Halloween. Looking at the caterpillar, this is your compression. You can see the same thing with Bollinger Bands, Keltner channels, things like that. This is a reverse engineered RSI by my man Donovan Wall. And again, massive expansion capable of this when you get moves. The tightest contraction in the history of this run, okay, for Bitcoin, going back to the beginning of this bull run. The tightest contraction. Could see a wave up, maybe to that median line, then a dump, or you could just start rolling over. Bitcoin, at time of this recording, is at 19,115. Let's go ahead and turn this off and look at a couple different things here. Let's look at the gummy worm. We went from a caterpillar to a gummy worm. And you can see we're just trading in a very tight range here. So not a lot of information to glean from that at the moment. And let's look at, what else do we have here? Let's look at our Nubia, see where that's at. So heavy supply line right above you at about less than 21K, 21.8 approximately. And then let's look at Ichi on the daily. Just curious what this is doing. I haven't looked at Ichi in the daily in a while. Ichi on the daily, you got a little thin spot here like we talked about, but you got to have velocity come up. You have a double bottom you made here too, just looking at this. You see this? You got a bottom here, but you need velocity to come up. And I would anticipate getting rejected, possibly there at the 150 if you could even come up that high. But guys, if the markets roll, Bitcoin's going to roll with it, okay? That's just the way it is. Bitcoin's been a leading and lagging indicator for the marketplace. Let's look at this on the 8-hour time frame. Look at this. Look at this activity you're doing on the speed fan here. You see this right along the 886 going up and down, up and down. We'll see how long Bitcoin can hold on. Here you are bullish in the money flow on the 8-hour time frame. 4-hour time frame. Now this I'm kind of upset about because you guys have heard me say this over and over. The 200, 233 give you excellent trade signals in a primary downtrend on the 4-hour time frame in Bitcoin. And we pumped up above the 200. Could not get above the 233. People always ask me, why do you use both of them? For exact instances like that. Look at that. Get above the 200, reject it on all the wicks here at the 233, and then you dumped. And I didn't get to see that because of all the activities going on today, but that's something I definitely would have traded in my room and posted that trade. Frustrating. So we're back down here hugging this 618 at 18,646. For you guys and gals watching at home, if you lose 1846 with any type of velocity, look out, okay? Because that's the 618. You've had some down thrust here, and be aware if you do try to trade this and you get caught one of these down thrusts, they can come right back up. So just be very well aware of that. You want to look at the other markets when you're looking at, attacking Bitcoin, okay? Because if the other markets are doing volatile moves, if they're not just dumping, then you could see Bitcoin whipsaw you right out of a trade. Now let's go ahead and look at Ethereum. We established this range last time. You can see we're still hugging this range. And this range is basically Ethereum. The white line up here is 1392, very close to the 618 at 1411. And your one fib down here is 11,178. Let's just throw a couple other fibs on here. See where the 786, 886 are, just to give you a little bit more idea what's below you here. 786 is what you're bouncing off of right now, 1309. 886 is at 1248. So basically, you did get a wick below 886, but if you lose that 886, guys, at 1248, look out for that one fib at 1178, and then you're starting to move down with a bias to the 1618, which would take you down to 802. XRP, guys, we drew this in Wyckoff last video. This is the first time I've seen it since then. I told you if you were going to be interested in potentially shorting this asset, this would be a good quadrant to short it at because you pumped right up to that fib level. I think we drew this last time as well. But you pumped right up to that fib level. And what we get here, that's 1618 in that fashion. And let's see if we do the swing low, swing high, swing low, 1618 right there. This is exactly where I said that quadrant, and look where you're at now, okay? Now you're re-entering your Wyckoff. This was an attempted cup breakout that failed. You see this? You will always roll back down. You exit with some velocity, you roll back down, but you got to hold that base. You got to back test this support line, okay, from Wyckoff. You back test that, you hold that base, and then eventually you wave back out. That's how you get a successful cup. Now you're doing this, and the deeper this starts retracing, coming back up, starts retracing, eventually it's going to fall out of that Wyckoff range if it stays on that path, okay? Because you had a failed cup breakout on XRP, which is right now at 44 cents. Okay, 44 cents on XRP. So you want to watch XRP and watch its descent. Gold, man, did I call the gold move or what, guys? Been walking you, literally slinking down, been walking you through this with the turbulence here at the 1672. I know my gold bug friends get so pissed at me when I talk about gold. But guys, this is coming down, and this is coming down for those of you that are patient to 1425. When the markets crash, gold will crash. Why do I say that? Because gold is supposed to be an inflation hedge, but why will it crash? We have 40-year high inflation because a lot of gold is paper traded. And gold will be the first thing to go when banks and hedge funds and countries need instant liquidity for margin calls and other activities, okay? They get rid of the gold because they need money, and gold will crash. It went down 34% in 08. This is a 31% down move here at 1425. You guys will have a great opportunity to buy gold. Not only did you lose this, you actually fell below the next resistance line. This was support, fell below it, and now you're trading down here at 1626. If I didn't have my funds tied up and shorting the indices right now, I definitely would have been looking at some stuff on gold, because this was just an easy call for a breakdown, okay? Let's go ahead and look at silver. There's that double top we talked about. We were at the 382 last time I left you, I believe, and now we're at the 0.5. 18.356, okay? 618's at 17.96, then you're going down to 16.69, and then the 1618 at 14.65. I think I have a 12.85 handle or price for silver to get to. So this still has some work to get down, of roughly another 33% to get down to that 12.85, okay? So you can watch this, and this is a double top that broke. You found support. The next level, if you are interested in looking at this potentially for trades, you want to watch that 618 at 17.96. You lose that, have a bias to come down to that 1 fib at 16.69. And let's look at oil, in case anything happens and I'm not able to get back online, guys. So look at this downtrend, right? This would be my account on Tinder with my likes. This was the trend lately with my Tinder likes, okay? It's been going straight down. I don't know. I haven't spent any time updating my photos or anything. Maybe it's my personality. Maybe I'm too abrasive. But this is a primary downtrend, and you're just look at the 45. Again, another geometric trading. This is a GAN concept, geometric trading, 45 angle. Look at how this has been used as support all the way down. I mean, it's really fascinating when you lay out a GAN fan appropriately, okay? So oil's finding support. We did have Nord Stream 2 blow up apparently today while I was moving. So it's Sabotage. Russia's investigating it. I guess the US, the EU's investigating it. I would always ask, because there's a lot of Twitter a buzz about this right now, I would ask, who benefits from that blowing up? The Russians don't benefit. I don't think they would blow it up. Why would they need to do that? Because they can just shut it off. It's their gas. They don't need to destroy the infrastructure. So who would benefit from that being destroyed? Who would Europe have to go to if that wasn't even an option anymore to get the gas? I'm not suggesting anything. I'm just doing a thought experiment, because I don't think Russia would blow up their own infrastructure when all they have to do is literally hit a switch like they did already and say, oops, sorry guys, maintenance, we can't sell you anything. They've already done that, so they wouldn't destroy it, but somebody else would. Somebody else would destroy it, so that they would have, EU would have to go somewhere else to buy that gas. So my question to you guys is, who benefits from that? I mean, I have an idea. I have an idea of who benefits, but can't get into that right now. All right, guys, 27 minutes. Again, that storm hits in the next 48 hours. I already lost power a couple times today, so I don't know if I'll get that next video up, but definitely, try to keep track of me on Twitter. I'll put tweets out there. Our Twitter handle is in the video description, so I'll have my phone, and yeah, I guess everybody just be well, and if anybody's watching in Florida, take cover. I'll talk to you guys next video. Take care, everybody.